regime. Now, moving on, the Reserve Bank of Zimbabwe has introduced the targeted finance facility to boost funding for productive sectors of the economy. This initiative is aimed at supporting Zimbabwe's projected 6% economic growth in 2025 by providing affordable working capital through normal banking channels. And the TFF, the RBZ, lends to banks at an interest rate of 20%, with banks extending loans to business at a maximum of 30%. This among several other features. Now, we spoke to Malone Gwadu, an economic analyst, on this particular subject, and this is what he had to say.
This is a central bank intervention in the financial service sector in the wake of the contractual monetary policy stance that is aimed at reducing excessive liquidity and money supply in the economy. But obviously it has had a consequence of limiting capability of banks to lend to the manufacturing and productive sector, and this has probably reduced their capacity and competitiveness. So this is a funding tool that is aimed at capacitating banks for disciplined and objective lending in a way that does not increase speculation or threaten the existing currency stabilization efforts that are there in the market currently.
Malone also shedded light on what this means for the productive sectors of the economy.
To increase liquidity for banks to be able to lend to the productive sector, which obviously increases our output and our productive competitiveness as a country. You will be aware that the prohibitive monetary policy stance that is there currently is aimed at reducing money supply and liquidity. So this will reduce the feed-through effect of any increase in money supply by having disciplined lending in the sector, and the Reserve Bank having a regulatory role in terms of reviewing who has borrowed, the objective of it there too, and measuring the impact it will have on the existing currency management framework.
Malone also spoke about where else this template has been applied.
Well, world over, economies structure different kinds of facilities in a way that targets their specific national interests. For example, the famous export finance facilities that is meant to enhance overall export competitiveness of every country. So by and large, it's prevalent in every economy internationally, but it varies from what the country is prioritizing in terms of financing. So in Zimbabwe, we are prioritizing the productive sector, which has become a byproduct of limited liquidity due to the money supply arresting tools that have been implemented by the central bank.
Malone Gwadu there speaking to ZTN Prime on the new targeted finance facility unveiled by the Reserve Bank of Zimbabwe yesterday.